Our keynote speaker today is John Adam Kanas, named President and Chief Executive Officer of BankUnited in 2009. Mr. Kanas led a consortium of private equity firms in the purchase of assets of a failed institution for the FDIC in a history-making transaction. Since that time, he has led the company's transformation into Florida Bank. In January 2011, BankUnited went public and raised nearly $900 million in what has been considered the largest bank IPO in U.S. history. Mr. Kanas has more than 35 years of banking experience, retired from Capital One Financial Corporation's banking subsidiary in 2007. He became president of the subsidiary in 2006 after Capital One acquired North Fork Bank Corporation. And in my opinion, they should have never changed the logo. I thought that was a great logo. He was named president and CEO of North Fork Bank in 1977 at the age of 29 and was one of the youngest bank CEOs in America. His accomplishments at North Fork include leading the company in its initial public offering in 1982 to its inclusion in the Standard & Poor's 500 index. During his tenure, North Fork completed 17 acquisitions and was recognized as one of the most profitable and efficient banking companies in the country. He presided over the company's growth from a small community bank to one of the most well-respected financial institutions in the Northeast and the 16th largest bank in the nation. At the time of its acquisition, North Fork Bank had nearly $60 billion in assets and more than 400 branch offices in 4 states. John Kanas is a native Long Islander and completed his undergraduate work at Southampton College. He did graduate work at Long Island University. He's a dedicated member of many professional, academic, and community boards and is the past president of the New York State Bankers Association. He's also a member of the Board of Trustees of the Weill Cornell Medical College. In 2005, Institutional Investor named Mr. Kanas as the best regional bank CEO in America. In 2007, he received the Woodrow Wilson Award for Corporate Citizenship and was conferred an honorary Doctor of Humane Letters degree by Dowling College. In 2012, he was awarded an honorary Doctorate of Law from Gordon College. Mr. Kanas is a frequent contributor to CNBC's Squawk Box and Bloomberg News. Ladies and gentlemen, please join me in giving a warm welcome to a fellow Long Islander, John Adam Kanas.
What I'd like to do is make some off-the-cuff remarks. First, about sort of who I am and where I came from, for those of you who don't know. And secondly, tell you a little bit about what I'm doing today in Florida and make a couple of comments about my industry, which is under siege, like many of our industries are today. And close by telling you what I think is going on in the broader economy. It's really nice, frankly, to be back on Long Island and to be amongst a bunch of business people like you. And I add my congratulations to all of the recipients today. Somebody in the group I was standing with before lunch said, talking about what a bad day it was, and I was reminded I was in California this week having lunch with my son, and he said, you know, don't talk to me about a bad day. He said, do you know that on this day in 1976, a man named Ronald Wayne sold all of his stock in Apple for $800. Unfortunately, he owned 10% of the company at the time. And that $800 is today worth $58,650,000,000. So you think you had a bad day, whatever happened to you so far this morning, think about Ronald Wayne. He's having a really bad day. I stepped into the doorway of North Fork Bank, and by the way, I'm not the youngest bank president in the country anymore. I know that you couldn't tell. In 1971, on my way to law school, the title of my life could have been A Funny Thing Happened to Me on the Way to Law School, because I met an older gentleman who turned out to be a dear friend of mine, running a small bank out in Mattituck, New York, where there were 3 branches, 40 employees. The total size of the bank was about $1 million. The total net worth was $100,000 and he talked me into, he didn't talk me into it, he bribed me actually to go there. I wanted to go to graduate school, and he said that they'd pay my tuition, and since I didn't have any money, that's all I needed to hear. So I went there, and I was going to stay for 18 months, and stayed there from 1971 until we signed the merger agreement with Capital One at the end of 2006. So much for planning. As they say, man plans and God laughs. I had the pleasure, as many of you have, of growing up in a Long Island company and growing up with Long Island and watching it grow and hiring more people and seeing success, and by the way, being witness to a great deal of failure along the way, which taught us all lessons that are indelible in our mind. Everybody reads about the great success story of North Fork's sale to Capital One and how much money everybody made. And nobody reminds you of the difficult times we had in 1989 and 1990 and 1991, where we were about that close to closing the doors on the place and going out of business. And many of you suffered along the way with me and the shareholders at that time. When I speak to college kids and they say, what's the lesson? You know, what's the lesson here? And the lesson is, you know, sort of in the words of Winston Churchill, never give up. In the fall of 1991, when Iraq invaded Kuwait and the world was coming apart and Long Island real estate was being given away, remember the keys coming in? People throw the keys on your table and walk out the door. In the fall of that time, the total net worth of North Fork Bank was $79 million. And by the way, headed south. Just a few years later, in 2005, having lived through that and grown along with Long Island, we sold North Fork Bank in a record-breaking transaction for almost 5 times book, for nearly $15 billion. So it is a lesson that I was glad to be part of. But more importantly, I think a lesson that all of us need to be aware of as we face the tribulations that are inherent in business today. The banking environment today has become very difficult. I don't have to tell you. If you're a customer of a bank, if you know a banker, or if you can spell bank, you've probably read articles about how difficult it is. Unfortunately, regulators, owing to the fact that they've been given marching orders by Congress, Tom, which we need you to go fix, have a toxic attitude toward the industry, which has resulted in a massive amount of overregulation. And if you've had a banking experience for a number of years, it's, I'm sure, not wasted on you, and you've seen what's happened, and you've talked to your banker, and you understand how difficult it's become just to be involved in the banking business. Some of the new regulations that we're faced with dealing with raise the capital levels that we have to keep, which doesn't enable us to make as many loans as we once did. We're dealing with a bill affectionately in our parlance referred to as the Dodd-Frank bill, which created about 400 new regulations and laws, all geared toward making it more difficult, geared toward trying to make the banking system safer, but in effect making it more difficult to do business. I am treated all the time to sitting in a restaurant someplace in New York, or sometimes in Miami, by the way, where BankUnited is today, invariably a couple will walk up to me, and the gentleman will introduce his wife, and he'll say, "This is the guy I always told you about. This is John Kanas. When we were getting our business started in 1973, he made me my first $25,000 loan, or my first $5,000 loan, or Marie, in your case, it was probably your first $1 million loan, right?" And it's heartwarming, and it's very nice to hear. Unfortunately, I sit back and think about it, owing to the regulations that are put upon this industry today, probably 90% of those things that we did as community bankers here in Long Island are prohibited to be done today. So while the effects of this massive overregulation and the effect of slowing down the growth of the banking system is not completely evident yet, it will be over time. 2 minutes on BankUnited. We went to, after I sold North Fork Bank, I went around the country for about 2 years with my friend and partner Wilbur Ross, and tried to invest some of his money in banks that were getting in trouble at the time, and tripped across this institution in Miami called BankUnited, which ultimately, not only, and you were very kind, Fred, to say that it was a bank failure, it was the most colossal bank failure in the history of the United States. We got a call from investment bankers who said, "We think that this company needs about $100 million worth of capital to survive." Well, that's the short story. The longer story is that by the time that the final chapter of that was written, this was a $12 billion bank that put a hole of $5.2 billion in the FDIC fund. So we were there at the right time and in the right place. Put $940 million on the table in March of 2009 when Citibank stock was 89 cents a share, and it was almost, by the way, to the day that the Dow Jones Industrial Average hit the very bottom and started to turn around and come up. Converted BankUnited, which was a thrift in Florida with about 80 branches, to what it is today, which is a bank holding company that owns BankUnited with 100 branches up and down the two coasts of Florida, mainly on the East Coast, and took it public 19 months after we acquired it. Put up $900 million to buy the whole thing in March of 2009. Sold 29% of the company in early 2011 in a public offering for just about $900 million. So it was a very successful and very financially rewarding transaction. We are proud of what we've done in Florida, but I must tell you that sort of reporting back to you, because many of you have homes in Florida, and I see some of you in Florida from time to time, things are, while recovering there, certainly not recovering at any warp speed. There are 217 FDIC-insured banks in the state, and as of last week, the FDIC reported that the total earnings of the 217 banks for the third quarter were $293 million. That's 217 banks, and 54 million of that was my bank, was BankUnited. So 19% of the earnings of all banks in Florida were earned by one of us at that time. So we are seeing a very impressive turnaround in the economy of South Florida, particularly from Dade County south on the East Coast. But that recovery is more anemic the further north you go and the further west you go on the West Coast. Banking has suffered greatly in terms of number of banks. There hasn't been a new bank charter granted in a year and a half. And at the peak of things in the middle 90s, there were over 350 bank charters issued a year. There's been a 17% decline in the number of banks in the United States since I left and went on sabbatical and went to Florida a few years ago. So bringing the number down to about 6,300. Consolidation seems to be all that anyone wants to talk about in the end game in the banking business. So you should expect to see more of the same consolidation and unfortunately more onerous regulation, and until Washington straightens itself out and until Congress begins to understand the damage that they're in fact doing themselves to the whole economy, I'm afraid that is something that will continue. There is some news. There is some good news in the banking sector. Inflows of non-performing loans have slowed down dramatically. They actually peaked in the first quarter of 2010. Net charge-offs peaked in the fourth quarter of 2010 and are coming down. Loan loss reserves are stronger than ever, and bank capital, which averaged for the decade of the 90s about 8.5%, is now measured at about 12.5%. So a 50% increase in bank capital level. Lots of liquidity, lots of capital, and lots of regulation, unfortunately. Banks get a knock for not making enough loans in this economy. Let me tell you that all banks that I know, including my friend Doug and all of the other bankers in the room, would like to be making more loans. It's the way we make money. It's the only way we make money. And unless and until we can engage with you business people and help you to build your businesses and lend you along the way, we will have these anemic kinds of returns. Revenue, some people believe, will start to accelerate in the early part of 2013, provided that Congress can come to some kind of a compromise over the next few weeks. Structurally, most people agree that banking will simply be less profitable. There's too many of them, and the underlying activity, the underlying economic activity here in the United States needs to catch up. The good news is all this excess capital that's building up in the banking system is giving people room to increase share repurchases, which tends to return value to shareholders and increase dividends. On the point of the general economy, let me make just a couple of comments. And as I said earlier, been nice enough to put a couple of microphones out. I'd like to answer a couple of questions. I think the issue that's going on in Washington today can be summed up by what Franklin Roosevelt said, although a lot of people are credited with having said this. I think it was him who said it, that the American Republic will endure until the day Congress discovers that it can bribe the public with the public's own money. And unfortunately, we've reached that impasse between our two political parties, where there's a great divide between the right and the left that have created a problem that, while a problem that started in Washington, is finding its way out into Main Street and will continue to be a problem in this country. Remember this, that we all celebrated a little over a year ago when the fiscal cliff was agreed to. Everybody, when we were trying to agree to raising the debt ceiling, which is another debatable point, everybody came together at a table, and the Democrats and Republicans shook hands and said, okay, we'll agree to the debt ceiling, but we'll also agree that we're going to solve the long-term debt crisis in the United States, which, by the way, the long-term debt crisis in Europe has created Greece and Spain and Portugal and all of those other countries that we read about every day. They shook hands on a deal that said, we promise that we're going to raise taxes, we promise we're going to reduce spending, and if we don't, it's going to automatically happen on January 1st of 2013. Well, here we are. Congress has done what Congress always does, nothing. And we're facing that time that's been coined, the cliff, which, by the way, let me remind you, was an agreement that Congress made with themselves, and a pledge that they made to the American people that they would solve the mounting problem of additional debt in the United States. What will happen? The Republicans will get shafted, taxes are going to go up, expenses are going to go down not as much as they need to, and we will solve neither of the problems. The debt crisis in the United States, while slower, will continue to mount as time goes by, and the overburdening of our high-income individuals and businesses by taxes will continue to put pressure on the economy. Let me just a couple of things for you to think about that fall into the category of good news in the overall broad economy in the United States. Household debt is down to record low levels at about 10.6% of the debt service payments of earnings. Historical outlook for residential investment in the United States that has averaged about 4.5% of GDP since 1947 is down to about 2.2%. We believe very firmly, and we see evidence of the fact in the housing sector that portion of our economy is returning to normalcy. Household formation continues to grow. That will eventually fuel additional housing starts and building permits and completions for both new and existing homes are measurably greater than they were last quarter and continuing. The shadow inventory, a term that was created by this recent debacle in the last 7 or 8 years, is continuing to decline. That is the inventory of homes that got created by these massive foreclosures all over the United States, have been milked back into the system and are disappearing ever so slowly. The unemployment rate and mortgage delinquencies coming down, got a good number today, although nobody believes the numbers out of Washington anymore. If you can believe that number out of Washington, unemployment ticked down again today, and the unemployment statistics look better. Bankruptcies of businesses as well as individuals continues to decline, and non-performing assets, which is the big boogeyman in our world, in bank world, are continuing to decline on banks' balance sheets. So we are set up for a recovery, but the recovery is very much a function of the leadership of our nation. And I hate to say this, but I and many of you probably share the fault, as much as anyone in this country, for not involving ourselves enough in the political system, for not making our voices heard in the political system, and for allowing ourselves to come to this juncture which has the potential to lead to financial Armageddon in this country. I want to stop. Actually, my business is very confusing today, and it's complicated, and all kinds of crazy things can happen. And I told you earlier that I almost became a lawyer, and didn't. And I'm happy, because I now know what lawyers do, and I would be awful at it, I'm sure. I have a daughter who's a lawyer, and she's not awful at it, but it wouldn't have worked for me. But I came across a story that it's sort of symbolic of the complication in the world today and how things can unfold in a very strange way. And I read it recently in a southern newspaper. It took place in actually North Carolina. A lawyer bought a box of cigars and then insured them for, among other things, fire. Within a month, he smoked them all, and he filed a claim against the insurance company. This is a true story. It was in the newspaper, didn't it? The claim, the lawyer stated, the cigars were lost in a series of small fires. The insurance company refused to pay, of course, and they cited the obvious reason that the man had obviously consumed the cigars in a normal fashion. The lawyer sued them and won. Right? The judge agreed that with the insurance company that the claim was frivolous. He stated, nevertheless, that the lawyer had held the policy from the company in which it had warranted that the cigars were insurable and also guaranteed that it would insure them against fire without defining what he considered to be an unacceptable fire versus an acceptable fire. Rather than endure a long process which would have been costly to take an appeal, the insurance company accepted the ruling, paid $15,000 to the lawyer for the loss of his cigars. Now, that alone is an odd story, but the end of the story is even more odd. After the lawyer cashed the check, the insurance company had him arrested on 24 counts of arson. With his own insurance claim in hand and testimony from the previous case being sued against him, the lawyer was convicted of intentionally burning the insured property and was sentenced, no kidding, to 24 months in jail and a $24,000 fine. I want to thank you for your attention. I want to thank you for inviting me here today, and it is nice to be home. Thank you.